Ladies and gentlemen, good morning. Thank you very much for spending this long weekend to find out more about CJ Century. Also, my sincere appreciation to the team at RHB Investment Bank for providing me this platform, as well as for your selection of CJ Century as one of the top 20 jewels for 2022. We certainly aim not to disappoint RHB Investment Bank or any of our retail investors out there. So, what makes CJ Century a compelling story? We provide total logistics solutions. We deliver excellent logistics solutions that meets all our customers' requirements, needs, and complexities. In fact, we have been in this industry for more than 50 years, and we will continue growing from here on. Which leads us to number two, our track record of growth. We have a consistent revenue of growth for the last 5 years, with our annual growth rate of 23.4% for revenues via organic expansion, as well as strategic acquisitions. In fact, our underlying continuing operations have been very profitable over the last 5 years, with EBITDA growth of 17.9% averaging for the last 5 years. This was brought about by number three, our disposal of our courier services segment. Our discontinued operation, which is our courier services segment, recorded cumulative loss of more than 70 million ringgit over the last 4 financial years. With the disposal of our courier services segment, this has given us opportunity to refocus our resources on our core competencies. When we talk about resources, we're talking about our financial resources as well as our operational resources. Number four there, we believe we have a very sustainable growth model. We are constantly increasing our investments on expansion of logistics as well as technology infrastructure. In fact, with all this growth, we believe we are also creating the right balance between economic growth, society, as well as the environment. A bit about our key financial highlights. You have probably seen this in our annual report. Our revenues have increased year on year about 37% to 869 million ringgit. Our PBT have increased about fourfold, so 16.6 million ringgit. While our profit for the year increased about fivefold to 6.7 million ringgit. Our net assets per share is 72 cents, while our EPS for 2021 was 1.15 cents. Now, these numbers here includes our discontinued operations, which is our courier services. I mentioned earlier, we have disposed our courier services, and we believe that a lot of these numbers will increase dramatically in 2022. A bit about activities, a breakdown of our activities. On average, in 2021, we did about 72.6% of total logistics in terms of revenues. For oil logistics, revenues comprises about less than 5%, while procurement logistics revenues comprises about 20%. On the right side, you can see that our EBITDA has been growing across total logistics as well as procurement logistics. While in all logistics, there was a bit of decline from 2020 to 2021. We hope to be able to restore the EBIT for oil logistics to 2020 levels at least. A more telling picture is our record of growth. Okay? Here we show our 5 years financial review of our revenues as well as our EBITDA. For our revenues, I mentioned just now, our CAGR was 23.4%. Our revenues grew from 294 million ringgit in 2017 to 843 million ringgit in 2021. And this is strictly for continuing operations only. Now, why did I choose a period of 5 years? 5 years denotes the period when CJ Logistics first bought an interest in Century. So during these 5 years, the annual growth rate for revenues was approximately 23.4%. A similar picture is shown for EBITDA. Our EBITDA grew about 18% over the course of the last 5 years to 71.9 million ringgit in 2021. Our balance sheet remains strong. After the disposal of the courier services, our balance sheet gearing has improved from about 0.5 times to less than 0.4 times, What's more important is that our net assets remains at 71 to 70, in fact, 72 cents currently. And bear in mind that net assets is based on our properties which are currently not revalued. We believe that upon revaluation of properties, if any at all, our values of net assets will have been a lot higher than just 72 cents. Our balance sheet as of 2021 remained healthy, with shareholders' funds of approximately 421 million ringgits. So a bit about our future direction. What are the areas which we intend to grow? Number one, customized solutions. We got to make sure that our logistics model are scalable and always technology enabled, and as well as we are able to provide an omni-channel logistics solutions. When our customers tells us that, you know, we have got this logistics problem, we will help them solve it to ensure that we win and continuously expand our services to our customers. With logistics, we got to make sure that we have an extensive network. So we have, with the acquisition of CJ Courier Express, we have been able to set up or expand our regional network, or at least our domestic network, and ensure a comprehensive distribution channel nationwide. Number three, diverse clientele. We are making sure that we have got a steady contribution from our diverse clientele base. Again, we come to this point. We do not want our customers to leave us after the initial period is over. We want to make sure that our customers continue renewing our contracts with us to perpetuity, obviously. Number four, targeted expansion. Now, we have got, obviously, CJ Logistics holds about 54% in CJ Century, and as a result, there are Korean expats in our organization. Our Korean expats are constantly targeting Korean conglomerates, and when, you know, there's a lot of hand-holding in place. When our HQ in Korea tells us, look, there are new customers or new potential Korean conglomerates coming to Malaysia, we will go and attack them. So finally, obviously, the logistics services will be awarded to us. That's the way we target the Korean conglomerates. And similarly, for regional MNCs, we believe we have, you know, we understand their requirements, and that's the way we target expansion. Number five, strategic rationalization. We have divested our courier services business. Again, we're relooking at our operation, we're looking at our group. How else can we improve our operations further? Number six, infrastructure expansion. We are continuously investing in distribution centers for expansion of storage capacity. Now, after the disposal of our courier services, we're able to again refocus on to expanding our logistics services. Again, we're talking about financials as well as operations. So we can divert a lot of our financial operation resources into infrastructure expansion. Number seven, technology driven. With the current 900 million sort of revenues we are having, we have got to constantly rely on technology. So we are constantly building technology infrastructure to meet our long-term needs. And number eight, finally, tax allowance. We have an investment tax allowance incentive currently with us. And we anticipate our tax rate will be brought down from 2023 onwards with the investment tax allowance incentive. Our customer base, we serve over 600 customers nationwide. What we have there is our 10 main market segments. About 32% of our revenues comes from electrical appliances. About 21% come from commodities. About 17% comes from fast-moving consumer goods. 8% comes from energy, while 6% comes from manufacturing sector. So in total, these five will constitute close to 70% or 80% of our revenues itself. We're certified for health and safety, road transport safety management system, supply chain security management system. We're also certified for Halalan Toyiman, GDPMD, as well as QMS. Now, all these certifications are important to make sure that we are able to cater and service the needs of our customers. Take, for example, Halalan Toyiman. This certification is very important if you are to service FMCG customers, fast-moving consumer goods customers. As long as food products are involved, we need to demonstrate that we comply with the halal requirements in servicing their needs. Okay. The next one, good distribution practices for medical devices. We're certified for that because we handle medical devices or gloves products for customers. So as long as we are related or we handle any medical device or medical related devices, we will require this certification. And on the right side, we have the multimodal transport operator. This certification allows us to service the government. Without this certification, we are unable to tender for any government contracts. So for last year, we have been able to service some government contracts. In fact, we have been able to service MINDEF, for example, and we have been able to bring in ammunition from Europe to their camp in Pahang, and we have been able to manage the logistics for the Ministry of Defense. So that, amongst others, with this certification, that will allow us to constantly be able to tender for government contracts. I've pretty much come to the end of my presentation. Thank you very much.